Hey, what's going on, family? Today we're going to talk about this article written from CoinDesk. Read the title. Look at it. Hedera's HBAR doubles as the market misinterprets BlackRock's involvement in tokenization. Then it falls 25%. You see the image that they chose to use for this article. Look at this. Misinterpretation. Hey, did you hear such and such? Hey, did you hear about this going on? Hey, did you hear? This is pretty much the situation that occurred with the idea that BlackRock chose HBAR as the blockchain to which it was going to do its tokenization of its real world assets. Just look at that. This image alone will give you a sense as to how fidgety people are just to get the leg up on the competition, or at least to misdirect people into thinking that this is something that actually occurred from the legitimate BlackRock business when it really wasn't. You miss out on things. The communication becomes different every time it goes down the chain of communication. You may say something that's real important, and then you might mention it to the next person, and then that person will mention it to the next person, but they forget that big thing that you just told them. And then it gets watered down, the communication, the information that was just released off of word of mouth. It's very important, especially within the cryptocurrency space, that you don't grab hold into a lot of the information that you see on these social media platforms. It legitimately has to come from, in this particular situation, BlackRock. BlackRock or the Hedera Hashgraph Foundation organization should have been the one to send out that social media post, tweet, or information to the internet. Let's look at this article real quick. Hedera HBAR token surged Tuesday after investors jumped to conclusion. Again, why in the world are people jumping to conclusion? Because they're all in it just to make a quick buck. That announcement that BlackRock's U.S. Treasury money market fund has been tokenized on the Hedera blockchain meant that BlackRock was doing the tokenizing. This is where the communication got crossed. If BlackRock money market fund was tokenized on Hedera, then apparently you must think that it was BlackRock who did it. Logically thinking, you would suspect that. But in today's cryptocurrency world, being in the sense of decentralization, it doesn't have to be. Anybody can grab a prominent name and place it on their cryptocurrency or token and say that they don't even have to say it. People just legitimately think that it was the actual business who did the tokenizing. The token gave back some of its gains when investors realized BlackRock was not directly involved. Boom. Now, how did they come to find that out? You see how fast information and news go? Right after people thought that BlackRock was involved with HBAR, soon after they found out that they wasn't, the market gave back some of those gains. As the initial releases stated, the tokenization was done by Archax in collaboration with Hedera. So you have two entities here. Archax, if I'm pronouncing that right, cool. If I'm not, okay. With Hedera. Did not one of them get the approval from BlackRock to utilize their name? Why did they choose BlackRock? Is there some type of agreement between all three entities, BlackRock, Archax, and Hedera? Or is it just something that was done between Archax and Hedera? Sometimes the use of passive voice is just clumsy writing. At others, it's not. But at all times, it's a mistake to convert it into the active tense without confirmation. You didn't have the actual proof that BlackRock was involved. You just took what somebody else said, what somebody else tweeted out, and ran with it with no proof, with no evidence. And then the market shot up 70-something% on the day. Today, that error cost some people a lot of money, especially those who got on late, especially those who read the tweet at the last minute. Imagine you just getting at the very top of the day, and then it comes out that BlackRock wasn't involved, and then the market immediately gives away 20%. The HBAR Foundation, which supports the Hedera ecosystem, announced Tuesday that shares in BlackRock's ICS US Treasury Money Market Fund have been tokenized on the Hedera blockchain in collaboration with Arch. Now, who's at fault with this situation? Is it Hedera? Because they're the one that announced Tuesday that shares in BlackRock's US Treasury Money Market Fund has been tokenized on the blockchain in collaboration with Arch. You see how people could take that one sentence and think, oh man, BlackRock has to be involved. Hedera tweeted it out. It came from the actual handle of Hedera, of the HBAR Foundation. They the one that sent out the tweet. Did they send it out just to put some FUD in there? I mean, some FOMO? Promotion? Marketing gimmicks? Just to point eyes to their blockchain so that the value can increase? Because look at the next sentence. Hedera supporters on social media read that to mean that BlackRock chose Hedera to tokenize its fund and sent the blockchain's native HBAR token up more than 107%. Here's one tweet right there. BlackRock just tokenized one of their money market funds on Hedera with the fire emoji. So Mason, whoever this individual is, actually took that tweet from HBAR and said, dang, that's legitimate. It has to be real. Let's go. It's time to buy HBAR. It's time to buy Hedera, because if BlackRock is going to use the blockchain and it's one of the biggest asset managers in the world, then apparently HBAR is doing something right. So let me go in and drop a bag. But while shares in BlackRock Fund had indeed been tokenized, it wasn't the world's largest asset manager that did the tokenizing. They didn't do it. It wasn't BlackRock. The BlackRock Fund had indeed been tokenized, but they didn't do it. Once the market realized this, HBAR slipped 25%. To be clear, both the release from the HBAR Foundation and the one from Arch were transparent as to the structure of the arrangement. So both of these entities, according to this article, didn't tell any stories. It was the people who grabbed the information, who grabbed what they wanted to see from the article, from the tweet from HBAR and from Arch, and they ran with it. And just by them grabbing what they wanted to read, allowed that cryptocurrency HBAR to go up 107%. Because they were transparent as to the structure of the arrangement. But as so often happens with crypto Twitter, people hear and read what they want to hear and read. And thereby lies the problem. Thereby, it's important for you to always realize to look at the chart. The CEO of Arch, Graham Roffer, said, quote, "It was indeed an Arch choice to put the fund on Hedera in response to criticism about overstated claims by Hedera supporters." So now, BlackRock entered the real-world asset tokenization sector last month when it launched its USD Institutional Digital Liquidity Fund on Ethereum. Not HBAR. Ethereum. Not Hedera's blockchain. Ethereum. So let's get back to the chart then. So take a look at my price prediction for HBAR. We did this all the way back to the 28th of February. We was looking for the price in HBAR to go up. We created this area right here, a sell zone. You guys can see from March the 7th to the 13th, that was legitimate. It was legitimately a place to where selling pressure had increased. Price in HBAR came back down to our support area like it did here on the 5th, and then it did it again on the 19th and the 20th. And then the market gave HBAR one more shot at that sell zone. It gave it one more opportunity to see if they really wanted to break that sell zone. and then it didn't. And that's when the market completely collapsed, fell through our buy zone right here, but it came down to our other buy zone. It came right smack dab on it, around 6, almost 7 cents on the 13th, and that's when the market ran up. So it took that false information that people misinterpreted to break that sell zone, these 3 sell zones, in 2 days. So it broke that sell zone, it broke this one, and it hit that one. So logically thinking, depending on your time frame, we got this price prediction right and wrong. Okay. So now let's talk about what we think is going now into the market in HBAR. Let me bring that line back. So this area right here is going to be our newest sell zone. Okay. Right there. And this is our most recent and valid buy zone all the way down here. So you guys can see it's a pretty big distance from where sellers are to where the buyers are, right? Now, this could be a buy zone right here too. The moment that HBAR broke out, right around there. And then another one could be around like 7.5 cents. I like that one too. So now, obviously, I'm not looking for the price to go up right now. So I'm just going to go ahead and give you this price prediction right here. Looking for price to go down. We can logically see the buyers try to hold this support area around the dime initially for HBAR. So that would be my first target, 11.42% there. Okay. Then my second target would be at this breakout low that occurred on the 23rd, which is another 24% market move to the downside there. And I might just hold that. Okay, but yeah, I can definitely see how on the chart the market still is pretty weak. So let's see which of these 2 targets the market and HBAR is going to grab first, or hold at least. So we'll do that there. And that's it. I am done. Go ahead and give me your thoughts. Make sure you maintain the profitability. And as always, trade different.